SPY was down over $4 today, and we saw price rolling over off of our upper dealer cluster zone. This is where option dealers are concentrated on the upside between 600 and 605 on the SPY, and this is often what we see when we reach these zones. We'll often see a pause, consolidation, and then further move higher, or a rejection. In this case, we saw the rejection come in, and that really shouldn't be a surprise to market participants after this huge run-up that we had following the election. In last night's video, we mentioned two key levels to the downside. One was the 597 level, and the other was the 593 level. And so we broke 597 pretty quickly right after the open this morning, and we actually closed right around the 503 level. And so zooming in here, we think we are at a pretty key support level here on the SPY. If we break this level tomorrow, there could be a lot of downside to go. And so bulls want to see anywhere from 592 to 593 really hold and bounce tomorrow. And I think there's a good chance of that happening. Tomorrow is the big monthly November options expiration. We've got the largest gamma exposure to the upside at the 600 strike. And I just want to flip over here to the S&P 500 chart. One key factor I noticed today was tremendous volume coming in here at the 6,000 contract. And most of this premium coming in here today at the 6,000 strike was for puts. And so a lot of that came in at the morning. And so for everyone who didn't close out those puts that expire tomorrow, they're going to have to be closed out in the morning. That could provide some lift here off of this 5950 level, which you can see is the largest gamma exposure concentration. Most of this GEX is 0 DTE. We closed right at that level. A lot of that's going to be rolling off. And so all else equal, there is a good chance here that we could see at least some attempt at a bounce tomorrow. No guarantees, of course, but that is an interesting risk-reward trade-off that we are looking at heading into tomorrow.
Anthony, I wanted to look at the VIX. There's a couple of interesting things to point out here. First of all, you can see the VIX did put in a marginally positive day. We have a green candle here, finally, after so many days. We're almost right to this whole moving average here at 1448. We're also right up against this long-term support resistance line that we drew back to early 2023. That's been important since then. And we mentioned yesterday the negative correlation between VVIX and VIX. And when you see that VVIX index in the opposite direction as the VIX, and you string enough of those instances together, that itself can be an indicator for a future VIX spike. And so far, we have basically or exactly, I should say, 3 out of the last 4 days that have been where VVIX and VIX have moved in opposite directions.
Let's take a look at IWM real quick. IWM, the weak link amongst the indices today, down 1.3%. You can see rolling over the last several trading sessions from this upper dealer cluster zone. We're into negative gamma exposure territory and starting to dip into this big gap here after the election. And so that's a kind of a precarious spot here for IWM. There's still large positive GEX to the upside. I'm watching this for a year-end rally potentially in small caps in particular, but there could be some more pain to go before we see some sort of footing here now that we are in negative GEX territory. So something to keep in mind. We even saw quite a bit of volume here, 150,000 contracts at the 230 strike. Price never even got down to 230 today, closing just above the lows at 230.201.
Let's take a look at TLT, Anthony. This volatility, especially since September, has just been nothing short of breathtaking. Quite a decline. We're getting to an interesting spot technically. We're at this lower Keltner channel, which, to be fair, it's been hugging that lower channel because of this steep downturn. So this in itself is not necessarily a solid contrarian reason to go long. I am interested, though, in the area. If you look at where we are price-wise and how it compares to, say, this area back in May, and what I wanted to look at more closely as well is the gamma picture, which interestingly shows today, in particular, very high option volume at the 100 strike And we're entering this dealer cluster zone, the G2 area, where we would expect, the potential for dealers to be buyers. And it's right at this really big 90 strike area.
Next, let's take a look at gold. Gold closing right around the 237 level, falling from its lofty heights of just around 257 about a week ago, all the way down here to the 237 level. So 20 points. I noticed over 60,000 contracts were traded at the 250 strike today. That's pretty significant, especially as we are coming down here into this lower dealer cluster zone. This could be an area where we could find some support between 235 and 240. So if we get a little base going here, I see a possibility of getting at least some sort of bounce going back up towards that 250 level. This is actually a position we got into for a longer term play heading into 2025. We got in a little bit early, but I do still like the prospects for GLD going forward. It just may take a little bit of time for gold to find its footing and head back up towards those recent highs. And along with this large volume here at the 250 strike, we also see the largest gamma exposure concentration is also at the 250 strike. So that's definitely something that we're going to have our eye on here in the coming weeks.
Yeah, thanks for bringing up that GLD, Anthony. Just very briefly, I think GDX is sort of telling the same story. You can see we're sort of right above the dealer cluster zone at 35, pretty close to this zero gamma line. But man, this big 40 gamma cluster and all the volume there has really caught my attention today. When we have volume that high, that's out of the money. It's common to see high volume where the stock is trading during the day, but it's usually an attention grabber when you have this kind of volume at a higher or much lower price. So that to me brings that in focus to potentially mean that there is some upside around the corner. And of course, if gold and GDX aren't always correlated on a day-by-day basis, but I would expect if gold prices were going to go up, that will benefit GDX in the big picture.
All right, guys, we're going to be continuing the conversation in our community Discord. I'll put a link down in the description below. Also, don't forget you can access our gamma exposure dashboard and our option flow analytics tools by heading over to geeksoffinance.com. I'll also put that link in the description below for you guys to check out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.